Hello class, I want to offer you some help with chapter 4 homework assignment, one particular problem, and this problem is number 4. So let me get to this problem. The problem has to do with so-called statements. In these financial statements there are mistakes made, and let me make it a little bigger. And so you have to figure out what errors were made, correct them, and you prepare 3 financial statements using the same data, but you prepare correct financial statements. Okay, so let me share the screen here so I can write in. Okay, how about this? So you're looking at the income statement for April, and you need to figure out what kind of mistakes this accountant made. So first mistake is right here. Financial statement, income statement is prepared for a period of time, not a date. Only the balance sheet is prepared for a date. The income statement is prepared for a period of time, so it should say month ended, April 30th. You do not earn net income in one day. You earn it for a period of time. Revenues, expenses look good. We do not need drawing. Drawing account goes to the statement of equity. And by the way, here it says that he, Taylor, French Taylor, did not prepare a statement of owner's equity. You will have to prepare it, okay? Up these 3 expenses. Let's take 10,800 plus 3,200 plus 910 plus 1820. We get 16,000 total expenses, 16,730. And then your net income is the difference between revenue, $42,800, minus expenses, so it should be 26,070. So this is your net income. Okay, so you use this data and you enter it and prepare the correct income statement. The next statement we need to prepare is going to be the statement of owner's equity. And so you have 3 lines, name of the company, just like this, right? Fashion, house, beauty supply, statement of owner's equity, and the period of time. And then you say capital. So let me scroll down here. So capital is listed, French Taylor capital in the beginning of the month is wrongfully put on the balance sheet. So this $70,900 capital is the first line of the of the statement of owner's equity. Okay, so you put here, oops. So let me do it again, draw. So the first line will be French Taylor, comma, capital for April 1st. So beginning capital, that's the first line, and it's $70,900. Okay. And then we are going to take with you plus net income that we just calculated. So 26,000. That's why we prepare the income statement first. $26,070. And then we're gonna take out withdrawals. So we're gonna take out drawing or withdrawals. So this 5,200 are subtracted right here. 5,200. And so when we take with you the beginning capital plus net income minus withdrawals, we're gonna get French Taylor capital for April 30th. And that's the last line of this statement. And this is the amount of capital I need to use on the balance sheet. Okay, so we take $70,900 plus 26,070 minus 5,200, we get 91,000 770. So this is your capital that we will use on the balance sheet at the end of the month. Okay, the last statement is the balance sheet. So let me do this. Let me use the eraser. So I'm going to erase all of this except for this final figure of the capital that I need for the balance sheet. So I just need this 91,770, okay? I don't need the rest of it. All right, erased. So let me scroll down to the balance sheet. Okay, so for the balance sheet, let me make it a little bigger, if I can. Okay, this is the best I can do. So assets, you can see accounts payable right here and accounts receivable need to be switched, right? So accounts payable is a liability and should be listed right here as $6,100, and accounts receivable of 13,000 should go right here. So 13,870. And so we have to recalculate our total assets. So this will be receivable, this will be payable, right? This will be receivable, and this will be accounts payable. So total assets and total liabilities have to be the same number. So for the total assets, we're going to take land, 25,000, plus building, 42,000, plus cash, 17,000, plus accounts receivables, 13,870. So that gives me total assets of 97,870. And this is also what I'm supposed to have on the right side. So liabilities plus equity must be the same number because that is our accounting equation. Assets equals liabilities plus equity, right? So you've got your accounts payable here, 6,100, and you've got your capital, but for April 30th. April 30th, and it comes from the previous statement of owner's equity, and it's 91,770. So 6,100 plus 91,770 gives you total 97,870. The last couple of things, balance sheet is prepared for a date. You do not say month ended. These are balances, it's a snapshot. These are balances on one day, the last day of the period. And also, even though Connect accepts it, the assets are supposed to be listed in order of liquidity, meaning cash goes first, receivables second, building third, and land will last the longest, so it goes as number 4. So this will allow you to solve this problem. Hopefully my video was helpful. Thank you.